Hey everybody, welcome back to Chip Stock Investor. I'm going to be talking about Alphabet stock or Google. In a previous video entitled 3 Great Stocks to Buy for the Long Term, we highlighted that Google is a core position in our portfolio alongside Nvidia and Broadcom and really fits into what we see as a accelerated compute bull market of the 2020s. We laid out some compelling reasons for our conviction then, and we emphasize that Google's AI leadership, profitable cloud growth, and foundational infrastructure for all things internet and connected world. However, after the most recent quarter's earnings, the market seems to be a bit unenthusiastic about Google. At the time of this recording, Google stock around $190 per share. However, zooming out and looking at the bigger picture will help us reason on why Google is still a core position in our portfolio and why we still remain confident in this company. Let's talk about it. This is a slide that we used in that video that I referenced. This was the quarter ending in September of 2024. This is where we think the market felt a little bit unhappy. You can see that the cloud revenue was up 35% year over year at this time. Now, fast forward to this most recent quarter, or quarter 4 for Google. Google is only up 30% year over year in their cloud revenue. Don't worry, don't start to panic yet. In past years, the market was absolutely ecstatic with 20% year over year growth, so I'm not sure why everybody's so upset at this time. Let's take a quick moment to get a little perspective on this for Google's cloud revenue. This is the yearly breakdown since 2017. If this is what a slowdown looks like, we really do not see any reason to panic. Before we get into some of the commentary from the earnings call, I want to mention the sponsor of today's video and the maker of this chart right here, finchat.io. We embed FinChat's charts in many of our videos. You're probably getting very familiar with them. You can get 15% off your own paid plan with the link in the description below. When analyzing a business, FinChat has a lot of great resources, tons of metrics. All the companies that you want to research are right there on their site. We use it every single day here at Chip Stock Investor. So if you want to analyze like us, get 15% off any paid plan, finchat.io/CSI, link in the description below. That's finchat.io/CSI. Let's talk a little bit about what the CFO, Anat Ashkenazi, said about cloud growth and demand. And highlighted in red, you can see that she said, on cloud, we do have demand that exceeds our available capacity. So we'll be working hard to address that and making sure that we can bring more capacity online. Now, we're going to get to the CapEx spend here in just a moment, but you may be wondering what happens if they bring too much capacity online. They spend too much money in AI or infrastructure, technical infrastructure in general. Ashkenazi had the answer to this question ready. She said, we do have the benefit of having a very broad business. We can repurpose capacity, whether it's through Google services or Google Cloud to support search or Google Cloud customers. They can do all of that by using some of that capacity in a more efficient manner. That compute capacity that Google is spending $75 billion in 2025 can be used for a plethora of Google services. Search, YouTube, Google Business, Cloud, they have tons of services where that capacity can be used. So we don't need to be concerned whether they're building too much of it. Now, as for the cloud revenue itself, this momentum likely will continue, and that makes Google Cloud an increasingly significant and profitable growth engine for Alphabet. We focus a lot on Google Cloud revenue in this episode of Chip Stock Investor, but of course, Google has plenty of other revenue outlets. This chart gives you an idea of where they're getting their revenue from. Of course, Google Search is the green bar, far and away their biggest revenue generator. However, Google Cloud, that blue bar, is gaining ground. Management said that they plan on spending $75 billion in CapEx, and it's primarily going to be used for technical infrastructure. That's exactly what former CFO Ruth Porat said last year. What does that mean exactly? Here's some comments from CEO Sundar Pichai on that. He said that means primarily servers, followed by data center and networking equipment, and probably a bit for building construction. Included in this is, of course, the custom chips. Google's been busy developing their own proprietary TPUs, or tensor processing units, purpose-built for their data center workloads. Those TPUs are designed in partnership with Broadcom's IP department. Google's been spending their money in a number of new regions, data center campuses, and new subsea cable projects all over the world. So they'll be spending a lot of that $75 billion building out this infrastructure. Here's the operating income statement from Google. We have Google Cloud highlighted there at just over $2 billion at the end of the quarter. Cloud operating profit margin 17.5% in Q4, helping with the total 31% year-over-year increase in total operating income. Flash back to last quarter, we have free cash flow in green highlighted at the bottom, close to $18 billion, down year-over-year at that time due to CapEx spend. And then this most current quarter, you can see a spike in free cash flow sequentially to nearly $25 billion. When we're presented with questions about whether or not Google is spending too much money in capital expenditures, we like to show this chart right here, CapEx to operating cash flow. CapEx to OCF was 36% in Q4 2024, well within the company norms. And this is really an incredible figure given how many checks the company has been writing to Nvidia and Broadcom for accelerated computing. And then also notice free cash flow per share and earnings per share. They both reached all-time highs as well. In all, we feel like there's nothing to see here if you're looking for CapEx spending gone wrong. Alphabet has more and more customers in need for more computing power, and they're simply spending to expand their supply of that computing power. And ultimately, they're turning an incredible profit in the process. Google, or Alphabet, remains one of our core positions here at Chipstock Investor. It's in the top 5 at the start of this year, and we're more than happy to keep it that way. We believe that the Mag 7 is going to continue to dominate in 2025. So from an earnings growth standpoint, driven by operating leverage from data center investments, we still really like Meta, Amazon, and Google. We'll have more videos coming your way from earnings season and much more discussion over on our Semiconductor Insider Discord server. We can't get a video out for every single stock that we have talked about on our channel, but we do comment on all of them over on Discord. So if you feel like you're missing something, check it out. Link in the description below, get you access to that membership, gets you on Discord where you can interact with us there, and a great community of like-minded investors. Thanks everybody for watching this episode. We'll see you again very soon at Chipstock Investor.